Welcome, crypto enthusiasts, to the Independent Reserve Podcast. We're joined by industry leaders and experts to keep you informed, entertained, and on top of the latest trends in the world of crypto.
Back to episode 7, we're almost certain, of the Independent Reserve Podcast. Today's guest is Sylvia To, who is the Head of Partnership and Research at Bullish.
Hello.
Hi,
Thanks
Sylvia.
for having me.
Thank you for joining us. And as always, JT, Head of Trading here at Independent Reserve, also with us.
Thanks, Lee. Sylvia, very nice to have you here.
We've got some exciting stuff today. We're going to talk about, initially I guess we're going to have a crack at understanding what the real world tokenization of assets is. Then we're going to talk about what crypto indices is and what they are and how they're taking the industry by storm, I guess. And then we're going to touch on what VCs are looking at, which is I guess all the work you cover off at primarily. Sylvia?
Yep. All the events, all those conferences.
You've been travelling around the world. So you're a Sydney girl. In fact, you're from Rockwood, right?
That's a cemetery, no, not quite. Lidcombe, yeah.
Lidcombe, which as I learned is also the home of the largest cemetery in the Southern Hemisphere.
That's right.
Which Sylvia told me all about in preparation for today.
Fun fact.
Fun fact. What else have we got? We've got to run through your CV, so let's go through it. So now I know you're a Sydney girl, but you're now based in Hong Kong, and you've been there for a while. Before that, you were a research analyst with Alan Gray. You spent some time with BT and also at Mirai Asset Management, so you've got a fairly well balanced background as well.
Yeah, so mainly in buy side. So I spent 5 years in Hong Kong now, moved up there from Sydney. I was with BT, as you mentioned before, BT Financial Group in the advisory side. And then I moved over to Alan Gray, which is a South African asset manager. It's a deep contrarian fund, interesting stuff there. And then I moved over to Hong Kong for Mirai Asset, which is a Korean, also buy-side manager, long-only Asia ex-Japan fund. And then I moved over to crypto 2021, I would say like mid-2021. So it's been a few years now.
And what sort of, I guess, led you to apply for a role at, say, Bullish in crypto? Did you have an interest in crypto before you jumped across, or how did you get into this space?
I think definitely had a real interest back in 2015, 2016. So it started when I was still living in Sydney. A friend of mine, he was an Ethereum developer, and back in the day, we were playing board games one night, and he said, okay, we're going to stop. He pulled down a projector screen and he said, we're going to learn about Ethereum. And he said, okay, this is called, your keys, public key, private key. This is how you self-custody, teaching us about cold storage. And we're all sitting there, we're like, what is this? We've heard of Bitcoin, but we didn't hear of anything about Ethereum back then. That was when ETH was like $7. And he was like, okay, this is not investment advice, by the way, but he was like, buy this token. And we're like, we have no idea how to do this. And he goes, I just taught you. And from there, I think like 6 months later, he was like, oh, did you buy it? And I was like, no, I didn't. And he goes, okay, look at the price now. And I think it went up to about 180, 200 or so from there. So I was like, okay, maybe I should start paying attention to this thing. So that was my introduction to crypto. And then I was in buy side. So as you know, a lot of fund managers, especially in Australia, I find, they've got quite a negative perception on Bitcoin, cryptocurrencies overall. We had a bit of an embargo on employees from buying crypto assets. So a lot of that kind of got held off until I moved to Hong Kong, and then I left Mirai, and then that's when my crypto career started.
Yeah, right. So it started because you were playing a board game with some friends.
Yeah, exactly. Yeah, and he was just a very big crypto enthusiast, and he just taught us, all the things that you actually really needed to know about self-custody and why it was important, why Bitcoin differs from Ethereum, why he was more bullish on Ethereum, etc. Yeah.
Yeah, right. And when you first started with, so when did you first start with Bullish? You've been there for a few years now?
Yeah, since 2021, actually. Yeah, my boss. So a lot of us have a TradFi background, which was why I was more comfortable stepping into such a different asset class and industry overall. So my boss, he was ex-CLSA and was a client actually of ours. He pitched me Bullish and I was like, okay. Back then, buy side, our margins were getting squeezed by passive investment. So a lot of people we saw massive redemptions coming out into passive investment side. So ETFs, for an example. And I just thought, okay, from a 10-year trajectory, if you were to look at, from a career perspective, what upside is there? And I just saw a ceiling hit. And I was like, okay, it's a no-brainer to move to something that's more nascent, that you've got a bigger headroom for growth, which is why I moved over, yeah.
Oh, fantastic. Okay, and can you maybe just outline exactly what it is in terms of your day-to-day role and the stuff you look at before we start asking you the detailed questions about that?
Definitely. So on the research side, I write a daily update which covers price action in the cryptocurrency market, as well as what's happening in TradFi. So mainly focus on US equity markets because it was so heavily correlated to crypto post-COVID. And then a few fun facts on chain, so anything from L2 transaction counts exceeding Ethereum's mainnet to Bitcoin wallet addresses growing, or other more interesting things like liquidations that's happening on chain, and news events that's been reported daily that I generally pick about 2 to 3 to cover. That's been material to the industry. And then I also do a conference coverage report, which has been quite popular in the last few years. So that's Consensus, Paris Blockchain Week, we've got Token 2049, in Dubai as well, that's coming up, Hashkey, which is the Web3 Fest. So that's generally like a 33-page report that's per verbatim of what the speakers talk about. And a lot of people that go to these conferences don't actually go to the sessions. So they go to side meetings and the side events, but what happens is they're on the flight back home. They're like, oh, damn, I didn't go to a single session. I don't know what actually happened in the conference. So they'll go through this report, and then quickly skim through it and then be able to kind of gauge what people are speaking about, what the hot topics are of that conference.
Okay, good. So you're going to go, and the next big conference up is Token 2049 in Dubai. You're going to be there?
Yes, I'll definitely be there. Before that, I'll also be at Paris Blockchain Week, so I'll be covering those 2 papers, and also Web3 Festival. That's happening before Paris Blockchain Week.
Awesome. Okay, I missed Paris Blockchain. I won't be there. I'm definitely going to Dubai though, so I guess you can send me a cheat sheet directly afterwards.
Definitely.
So I can tell everyone what I learned over there.
Yeah.
All right, JT, how you going?
Yeah, great, thank you. There's plenty going on in the market, and we're busy as ever.
Busy as ever. What do you think's happening at the moment? Bitcoin seems to be trying to just poke for some new all-time highs, but we're not quite getting there. Where's the market heading in the next? Where does it want to go right now?
Yeah, I'm really interested in hearing Sylvia's thoughts around correlation as well between US equities and cryptocurrencies at the moment. For the last 12 months, I guess we haven't seen significant correlation with crypto with any asset class. But to answer your question directly, I think this is just a little bit of an order book shakeout. When an asset appreciates materially and it's supply side driven, order books tend to get they tend to have quite significant positions build, and they become liquidity points and some pricing target points for the market. And what that tends to do is drive volatility, as well as price action around those significant order book levels. And I think over the last week or two, the volatility that we've seen in Bitcoin in particular, and I've spoken a number of times now that Bitcoin is floating all boats in this asset appreciation on the cryptocurrency front, and it just looked like a little bit of a clear out of order books, re-stabilisation of orders which will come back into the market. We've seen a very high focus on-chain of grayscale assets being moved around, and the summation of net positive flows between the ETFs and being the positive flow and the grayscale Bitcoin Trust outflows. And that's, you know, intricate and detailed and something that the market will focus on for a long period of time. But this is, you know, what happens in all markets. Markets go up and down, and the textbook would say in a random walk that exhibits a trend. This, to me, is a little bit of a clear out before new powder gets set in order books and the supply side dynamic continues.
Good stuff. That sounds bullish. Pardon the pun. All right, let's get into it. Tokenization. So we have to sort of talk about what it is and I guess why we should care about it. You mentioned sort of, I know as we were talking beforehand, that maybe it's even a bit of it's a trend that's already passed, but can you break it down maybe for our listeners and just sort of talk about what it is and why it's relevant and what you're seeing in the market?
Yeah, so tokenization in terms of real world assets, it's fractionalization or tokenizing a certain asset class, whether it be securities, tangible assets like real estate, or intangible assets like intellectual property. Maybe a good example would be stablecoins. So, for an example, something like Tether back in the day when it was heavily exposed to commercial paper, so short-term money market instruments, can kind of think of it as a proxy, so a tokenized money market fund that acts as a peg 1-to-1, but without yield, so non-yield producing stablecoins. The industry has kind of evolved from there. You've got other tokens like Athena that have gone for a delta neutral strategy that's yield-bearing asset. And in terms of tokenization of US treasuries, so for a long time, as a retail investor, getting access to yield like that would be quite difficult. So, you know, if you look at underbanked or underdeveloped nations like in Turkey, the lira, where there's hyperinflation, or Venezuela, Argentina, where the peso's hyperinflated, dollar access is quite a difficult point for them. And then when you think about retail and you go, okay, access to short-term treasuries as well, that's always been quite difficult for retail to get into. So what these projects like Franklin Templeton's Benji protocol, or their new product, as well as Ondo protocol, they've essentially tokenized these short-term US treasuries and being able to provide that access to a different target market outside of just purely institutional investors. You've also got, you know, the TVL within these protocols going from 300 million a year ago to now like 1.2 billion. So that was a trend that we were seeing towards the tail end of 2022 throughout 2023. Yeah.
Are you still seeing much development in that space, or is it kind of, as you said, do you see development in the space at all, or do you think it's kind of tailing off a bit?
Yeah, it's definitely spiked up. So for, I think, 10 months in the last year, it was trailing at about 600 mil in TVL. And then the last month, it's spiked significantly up to that 1.2 bill in TVL. Yeah.
Hey, I know that Larry Fink was, I guess he's become, BlackRock's getting more and more involved, obviously we've seen the ETFs. He seems to be pushing more, he seems to be talking a lot more about this tokenization stuff. You across sort of the stuff that BlackRock's potentially looking to do in this space?
Yeah, I know they, a few days ago, they launched a filing for a liquid fund, a digital asset fund, and that sent Ondo Finance's token action, price action just flying through, mainly off the back of them partnering with this firm. I can't remember the name of the firm, but it was they specialize in tokenization of real world assets. So there was a lot of speculation around real world assets gaining traction from that fund through that partnership of BlackRock and that firm. Hence why Ondo had that upswing in price action.
Yeah, right.
Yeah.
Sorry, go ahead, Jason.
I was going to ask, it seems like the low-hanging fruit at the moment for real-world asset integration with cryptocurrencies is a cash product, some sort of short-dated US Treasury, and then some duration credit, which all sort of gets put together in a portfolio, and it allows for redemptions and it allows for easy access of scalability. What's next? So, the easy thing I think is now tried and tested a number of times, and there are a number of different people doing it, and it's effectively a treasury yield product. But can we see real-world assets go into synthetic tech stocks, or can it go into real estate assets, or where can it morph into?
I've seen a project, I think they're UK based, it's called Tangible. Don't quote me, I can't remember exactly how much TVL they have right now, but they're a real estate, like an RWA for real estate, and they've got an SPV kind of structure where the real estate, the property itself is fractionalized. Don't know legally how they go around doing that, but I think liquidity is probably one of their biggest issues when I was speaking to them. And tokenizing everything isn't really the main, I guess, strong point of this theme. I think like they've got to work out quite a lot of areas where if liquidity is an issue, also like the legal structure is an issue, and whether or not that date of, okay, the property is going to be up for sale in 2 years' time or within 1 year time, like how is someone going, if you're a bad actor as well, like how are you going to try and arb that? There's quite a few headwinds, I think, in terms of tokenization of real estate itself. Hasn't been completely ironed out. So I would say I'm not completely bullish on that space, but yeah.
Cool.
I guess, you can't tokenize everything. So where do you, just sort of to wrap up on this sort of scene now, we have a pretty good understanding kind of what it is. Where do you think, I guess, are you seeing where some of the main applications for this could be? Because I guess my question comes from a lot of people outside of crypto kind of go, well, what's it actually good for? So where do you think, this, you said it's not going to be applicable to everything, but where do you think maybe the areas that haven't yet been explored are that it would be really good to apply to?
In terms of tokenization of real world assets. Yeah. Again. I think, again, bridging back to being able to serve a community that's been underbanked or unbanked, okay, and being able to provide exposure for certain asset classes where in the traditional world they've been shut out from is quite important, and we've been kind of seeing that with other products as well, which is probably what projects, which is what I'll probably talk about later on.
Okay,
yeah.
Absolutely. All right, so now that we've got that covered off, I know the thing you're super keen to talk about, it seems to be the hot topic right now, is crypto indices. Indices.
Yes.
So perhaps I'll throw it to you. You can outline what it is and why we should start caring about it.
Yeah, I mean, I don't know if it's a hot topic right now per se, but I definitely think it's something that resonates with the traditional world. They know. So MSCI came up with GICS, which is the Global Industry Classification Standard, back in 1999, and that standard was made up of, I believe, 11 sectors. So that's like your consumer discretionary, consumer staples, utilities, healthcare, these kind of sector-specific classifications. And why it's important is because a lot of the indexes and indices products are bred out of this GICS framework. So similarly, if you look at the crypto world, MSCI and Goldman Sachs did a joint collaboration in creating Autonomy, which was their own GICS specific classification standard. CoinDesk, there's DAX, which is the digital asset classification standards as well. 21 Shares and CoinGecko also created GCCS. So why it's important is because if you look at a certain stock, for an example, I don't know if you're familiar with like Reliance Industries. It's like an oil refinery business in India. They're actually not as throughout India, they're known for Geo platform, which is their telecoms platform. They've got like integrations with WhatsApp and wallet kind of facilities that's been built out. So if you're trying to classify that particular stock, you go, okay, is it a telecoms or does it fall under energy stock because it's a refinery business? That's a downstream refinery business. You kind of have to go backwards and you go, okay, so there's 3 layers to this thing, and you go, okay, if it's how MSCI classifies it is if 60% or more of its revenue is derived from that particular product or sector, then it's classified as that sector.
Yep.
So for Reliance Industries particularly, it's like their bread and butter's been like refinery business. So while people might see it fall under telecoms or tech, it actually falls under refinery because over 60% of their revenue is derived from there. What's difficult if you translate that into crypto is that there's a lot of this double accounting that you have to factor in for. So for Ethereum, it might be a smart contract layer, but it also might fall under currency, might also fall under layer 1. So how do you mitigate that? I still don't think that's been completely ironed out, per se.
Is that maybe like a classification issue in terms of actually figuring out, well, which classifications should apply to which tokens and all that kind of stuff?
Yeah, so I think you go back to the methodology and you go, okay, if there's 3 pillars, as I was mentioning. So for an example, if it's DeFi, you've got exchanges, and then you've got derivatives, and then you've got asset management or credit platform. And then from there, that's the second layer. So DeFi was the first layer, second layer was asset management, derivatives, exchanges, etc. Third layer, then it goes down to AMM, central limit order book, if it's an exchange, and then it goes down to if it's a lending or borrowing protocol, if it's like a credit platform. So there's those 3 kind of silos that you have to fan it out to, so to say. Yeah.
Okay. And this becomes a market-based indice that's looking to be tokenized to be able to invest in that particular silo. Is that I guess the product that they're looking to create for the consumer, the end consumer?
Yeah. So for an example, CoinDesk, you've got DAX, but then you've also got the CD20, which is the CoinDesk 20 indices product, which goes, okay, out of the universe through their methodology of classification, what constitutes those top 20 tokens. Bitcoin and Ethereum, the blue chip majors being the part of the holdings, and then you've got other ones like AVAX, or you've got like outside of stablecoins as well, so not considering the stablecoins. And they get reweighted just like in TradFi, you'll see reweighting in a lot of the indices. That kind of product, there's other ways which you'd be able to monetize on it as a firm. I think licensing is one of them. So when you look at the traditional world, when MSCI came up with the Asia ex Japan Index, a lot of the buy-side fund managers would benchmark their funds. So if I'm doing a Asia sector leader fund, and I'm a fund manager that has to report for attribution, I have to go, relative to the benchmark, quote, MSCI Asia ex Japan Index, the fund has outperformed by X percent. The fund is underweight tech stocks by this X percent from an attribution level. And then from a geography level as well, it's important because you go, okay, the fund is overweight on China, but underweight in India or underweight in Korea. And that's where buy side comes in. And if you're a hedge fund or if you're a fund in the crypto world, it doesn't really make sense to benchmark to just say Bitcoin, for an example, as an asset class, right? Like you don't do that. You don't do that in the traditional world. You don't really do that in crypto either.
And will this be the next iteration of TradFi flows coming into cryptocurrencies, do you think? Because I guess before you mentioned, in your previous life there was active asset management and passive asset management that can track these indices directly or can try and outperform the indices. But either way, TradFi understand these products and they tend to like these products. Is that the lineage to try and get more funds to be attributed into cryptocurrencies?
Yeah, I definitely think it's a stepping stone. So it's an important factor for the traditional world to understand, to be able to bridge through. I think a prime example would be when back in 2016, when the MSCI, I think it was the Emerging Markets Index, they actually increased exposure to Chinese A-shares, so China A-shares market. There were significant liquidity changes that came about. So foreign investment within China A-shares grew from, I think, 38 billion at the time to 200 billion, which is like a 5x growth. So that not only helped China A-shares in terms of like the whole market structure for them, but it also improved liquidity around that. And I think if you look similarly with the crypto universe, if you've got players coming in and you've got the traditional world being able to mimic and understand these indices and these attribution kind of characteristics, then they'd be more comfortable in doing that. And I think indices would be maybe not in the next 1-2 years, but maybe 5-10 years down the track, it's going to be a lot more powerful in terms of what these index providers start including within their universe. So they're going to have much more power when they can go, similar to MSCI, and when they go, okay, we're increasing China holdings now. And that rebalance completely changed market structure for China. And it changed liquidity provisions for them. So these indice providers later on down the track, you might see when they gain enough size, they'll also have a similar kind of power dynamic as well.
Gotcha. So just, can you give me maybe just a practical example of sort of where you're sort of seeing interest at a fund manager level for this type of thing?
I think for now, the industry is still nascent. So if I look back to Australia, there's dealer groups, there's consulting groups. The main barrier to this getting adopted is, there's on a APL, which is an approved product list, you've got people like Panorama from BT, or you've got OneView, or you've got AMP, their own platform where advisors use to access these products. To be able to get onto an APL, there's various processes that are in place and certain gatekeepers. So one big one is the fund has to be of maybe 3 to 5 years track record since inception.
Mm-hmm.
Some of these crypto funds don't really have that, for one. The second one is ratings by Morningstar or Lonsec or Zenith. So it has to have a bronze, silver or gold standard of rating for these funds to be able to get onto the APL.
Mm-hmm.
And minimum AUM is also a big one. A lot of funds are not profitable. I think it was the 50 mil mark. If your AUM falls below that, operating costs, etc., and all that, it's not feasible for a fund to operate. So there's certain barriers of entry that still have to be figured out before they're going to be willing to step into this world.
Yeah, absolutely. I think we don't want to go down that path, but I guess also the regulation element and all that kind of stuff as well.
Definitely seems like a window to the future, though. I think TradFi has really shown where this benchmarking can go, and how it gets rated, and what that might look like in the digital asset space.
Yeah, I definitely think it's important to have that infrastructure in place before TradFi actually steps in and goes, okay, we're going to start allocating now. And these dealer groups are then able to say, oh, well, we've got indices, we've got attribution. We have a way of mimicking something that our clients would understand in terms of reporting as well.
Yeah, and I guess the other big thing is just the price action is really important, and just interest in the space, because there needs to be interest in the space that people develop these products, which then allow it to reach these mainstream platforms for distribution, I guess.
Yeah, there's definitely interest. Well, certainly when I come back to Australia, every year I come back, there's more and more interest in this space, and even fund managers are starting to kind of change their tone. So 3 years ago, I would come back and to my old firm, and they'd always be like, "When do you want your old job back? Has crypto blown up yet?" And I'll be like, "No, it's still going." And then the next year, they'll be like, "Oh, how is crypto?" So the tone starts changing. And then this time, when I recently came back, I was like, "Okay, so when are you guys going to admit that you were wrong?" Right? Like,
has anyone admitted they were wrong yet?
Yes.
Oh, well, there we go. That is progress.
An analyst that I used to work with, he said, "I will admit that I was wrong about Bitcoin, because for a long time, these fund managers, like, it's a Ponzi, etc. And then when you start raising different points to them, they go, I just can't value it and I can't understand it. They go, I get the technology, I get that, I support blockchain, the technology, but it's like, okay, then go further then. If you do support the technology, then why don't you do more research and try and understand the space better?" But they just stop there. They just stop at a very surface level. And the ones that said that they were wrong about it was, I said, "Is it going to take 100 years for you to admit that you were wrong? Or is it 50 years? And he said, "Oh, I won't be alive by then." So good point. But it's, at what point do you say, okay, objectively speaking, I was probably wrong about this asset class?
Yeah.
And some of them have actually come out and said, okay, I was wrong about it, and are more open to listening about why it's an important talking point now, and asset class for not only diversification, but for communities and people like the underbanked and unbanked, right? Like, these people that don't have dollar access. We're privileged enough in Australia to have bank accounts, access to financial service products, but these people that are living paycheck to paycheck, unsure of whether or not inflation's going to eat away at that next paycheck, they need to also have an alternative to place their assets. If a war breaks out, or if there's political conflict within your country and you're trying to flee the borders, what do you carry with you? Do you want to carry like a 24-word seed phrase, or would you want to hog like a barrel of gold and get robbed potentially on the way there?
Yeah, look, absolutely. Absolutely. I think with education and with sort of price action comes a lot more sort of interest. I mean, we can all tell our first story. I think everyone, the first time they heard about Bitcoin, it just sounds too ridiculous, and it's so easy to dismiss it. It's so easy to dismiss the whole space until you actually kind of do a bit more work into it. Like, I think we went through this story before. I remember the first time I heard about Bitcoin was actually at a friend's Bucks party back in 2012. And it was a mate of a mate sort of said, oh yeah, he knew I had background in finance, and said, well, what do you think about this Bitcoin thing? And of course I dismissed it, not really knowing about it other than having heard of it, this internet money thing. And I gave him all my reasons, which were just kind of off the cuff reasons as to why it sounded ridiculous. I was wrong, obviously, and he said to me, I still remember this thing, because he kind of said to us, and this kind of sounds like a very familiar story to a lot of us, he kind of said, oh, okay, yeah, whatever, man, look, I got bought my $500 worth, I'll see how I go. And of course, I remember thinking to myself, going, it's one of these things, maybe I should just buy $1,000 worth and see how I go. Price of Bitcoin back then, $11, of course. Didn't buy, like most of us, and now I'm here working full time in the industry, realising the errors of my ways. But it seems like, you know, we get this across the board, but eventually there's some tipping point where people realise, hey, I was wrong, and maybe I need to look at it further.
Yeah, I think like back then it was undergoing price discovery. So you know, obviously when an asset first undergoes price discovery, it's really volatile, and it's quite easy to dismiss volatile assets and just basket under, I don't understand too hard. But I mean, one quick example is last year when my sister was getting married, I was trying to find, okay, nothing to her husband, he doesn't listen to this anyway, but I was trying to find an asset
Keep this in,
class.
we're not editing it out.
Well, she was getting married, not that I wasn't bullish on that, pun intended, but I wanted to gift her an asset that he couldn't touch and he had no recourse over. And even if they did divorce, touch wood not, but even if they did, the courts wouldn't have any recourse to this asset. And I said to him,
oh, that is me. Apologies for that.
no worries. So I said to her, I can either give you a Bitcoin or a diamond necklace. And she chose a diamond necklace, but I was thinking, okay, you know, if she chose Bitcoin, I would give her the 12 words, I would keep 12 words. And then if anything ever happened, I would still be able to give her the remainder of the seed phrase, and she would be able to collect that one Bitcoin.
Yeah, right.
And she chose a diamond necklace, of course. Bitcoin was at 16.
I thought this was a good news. She's taking the diamond.
No, so Bitcoin was at 16K at that point. So I bought the Bitcoin for myself, but gave her the diamond necklace. So yeah.
I hope the marriage works out.
Works out for me.
and your Bitcoin. Bitcoin is, I guess, pretty much the ultimate bearer asset in that regard. It's borderless. It's unstoppable. It's permissionless. It's exactly why. For all those reasons. That's probably a really good analogy of why everyone needs a Bitcoin to themselves.
Yeah, weddings should, you know, the next time you decide to gift someone for their wedding, you should be gifting Bitcoin.
Bitcoin.
Give them a ledger.
That's a great gift idea. All right, we have to get into it because either I ask you about VCs and what they're looking at, or we start talking about Rockwood Cemetery, which I know we can go each other direction you want. But let's go with VCs to start. You mentioned before, what are they looking at right now? I guess they're back in the space.
Yeah, VCs have been deploying. So, you know, back in the bear market, there was not much dry powder, and VCs were scrutinizing every single project that they were looking at, and DD was really thorough. But then in a bull market, what VCs kind of look at is network effect and narrative. It's a completely different investment style. A few hot themes. So I was at ETH Denver last month. There was huge talk on ABSs, which is liquid restaking projects, for an example. That was a really big one. L2s on Bitcoin. So not just ordinals, but similar things to what ABSs or like liquid restaking protocols are building on Ethereum, but a staking narrative for Bitcoin, and then providing yield for BTC is a huge one. There's also DePIN, which is decentralized infrastructure, physical infrastructure networks. So I think maybe if we want to go into one of these topics or two or three,
please,
or
all of them. What's of most interest to you in this space right now? Yes.
I think liquid restaking is a very interesting topic at the moment. So basically, breaking it down, you've got we'll go back more. and go, okay, there was proof of work and then proof of stake, and Ethereum migrated to proof of stake. So when you're staking an asset, it's 32 ETH before you become a node validator, etc. Lots of barriers to entry with that in terms of slashing risks, etc. So Lido came in and they go, okay, you can stake like half an ETH or 1 ETH, and then you can still be provided yield and be part of X network, and there'll be a delegated proof of stake provider for them. And then you've got liquid restaking, which is, okay, I take my ST-ETH now, and then I go to something like EigenLayer, and then I can choose from there an infrastructure developer that I want to post my ST-ETH with. So I kind of think of it as a second derivative, so a derivative of a derivative. So the first derivative being ST-ETH, which is Lido, and then the second derivative being like the infrastructure developer that you choose to stake with, which might be like Ether5 for an example. And then from there, you're getting yield. But I think it's also important to highlight that when you're restaking, you're also subject to slashing risks. So how the restaking basically works is you go into an ABS, which is I can't remember. Okay, so it's an availability validator service. So you're able to delegate to them at which risk point you want, so higher risk, higher yield, etc. And they then are able to use your ETH to bootstrap and be able to secure other networks that need TVL within as like a staker, right? So the issue with that is you've got a few risks in place, which is, okay, if I stake within this ABS, this infrastructure developer, and they somehow, the lights go off and, that node or that validator is slashed, then that's my ETH gone. And you're subject to more risk in restaking. When you kind of look at a derivative of a derivative, or you can kind of think of this as like a structured product as well, it's falling into the hands of retail. And if there is a bubble or if there's something that blows up, it could have quite a cascading effect, which is something to also highlight. But I think it's great because there's the proof of concept side of it that solves for the data availability issue. That's been a problem for the last few years, that there's this whole argument between monolithic chains, which is like Ethereum, that does everything, from execution to settlement to, basically the securitization and data availability, etc. But then when you start going to modular chains, where you start splitting it up and going, okay, you focus on the execution layer and settlement layer, and then this project will focus on scaling, and then this other project will focus on the actual like execution side or whatever, which is how modular chains work.
We went pretty deep there. I think for people who are familiar with the space would kind of definitely understand what you're saying there. But how would you sort of break that down, I guess, to someone who's kind of relatively new to the space? How would you sort of say, well, okay, there's all this stuff happening, and this is why it's important to the crypto ecosystem overall. And how would you explain what you just sort of said then to someone who's kind of newer to the space?
Well, I think a crypto degen would think, okay, I'm staking within EigenLayer, and then I'm staking within ABS, and then I'm getting points of different yield. And back, I think a few weeks ago, there was a whole lot of airdropping that was going on with these ABSs. So for someone that, I think, if you're trying to understand staking, like and liquid restaking, I think maybe take it one step back to the first derivative, which is understanding proof of stake and how that works, and how you need 32 ETH as a node validator, and then go, okay, if my node goes offline, what are the risks? I have the slashing risk, I get penalized. As long as the network itself has over 2/3 of good actors and bad actors don't exceed 1/3 of the network, then Ethereum's considered kind of safe as a securitization network. But when you move beyond that, then that's where it gets more complicated with this Byzantine fault tolerance BFT kind of narrative, which is completely different to what we're talking about. Trying to not complicate it, basically. Understand what proof of stake is, 32 ETH, and then you go, okay, understand what a project like Lido is. So Lido is a liquid staking protocol, an LST, and what you can do with STETH, which is that I stake my ETH, I get STETH back.
So I guess it's kind of like, well, let's say for example, I haven't got 32 ETH, but I've got 3.
Yep.
Now I've got an option that allows me to get a yield for it securely.
Yes, as in you're able to be a quote unquote a node validator through Lido protocol, and you don't actually have to post up the collateral of 32 ETH. You're still able to get yield with your 3 ETH.
Perfect. Yeah, and so I guess now from
making it more accessible.
Making it more accessible is probably the key point, isn't
Yeah.
it? So let's say, for example, tying this back to the whole what VCs are interested in, because of all this stuff, and they're obviously invested in doing what you just mentioned.
Yeah.
That from their point of view, they're going, hey, I can monetize this because all of a sudden now, you don't have to be a big, you don't have to have 32 ETH. Now I can invest in businesses that will attract a bigger audience. The person with 1 ETH, the person with 5 ETH can now use Ethereum to stake it and get a yield. And the VCs are then, I guess, investing in these projects or interested in these projects. That's how they're going to monetize it. Is that kind of a thing?
Yeah, they can monetize it on 2 fronts. One, it depends if the project itself gives an equity component, but generally VCs go for token allocation now. And then from the project, the higher the TBL, the more traction it gets in the news, the more narrative there is around it, then the token price up.
Yeah. I guess, that's what I guess I'm trying to, so if I'm putting my VC hat on and I'm investing in this project, how am I thinking I'm going to get a return as opposed from just the price going up? What am I thinking is going to drive that price up as opposed to just narrative or a bull market?
Definitely during a bull market, it's all around narrative and network effect. So a lot of, probably controversial, but a lot of VCs I've spoken to that don't touch that equity component are looking at the token upside. And they want a shorter vested period, a shorter cliff, shorter token unlock. So you're looking at some projects that are giving 6 to 12 month unlocks now to certain VCs.
Really?
Yeah.
Does that concern you at all?
Yeah, because that's essentially a pump and dump, right? They don't really care about longevity of that project, and it's more of token upside that they're looking at.
Okay.
Which is very bull market vibes.
Bull market vibes.
Yeah.
Okay, so early bull market vibes and that. So JT, how do you sort of see that and go, well, hang on a second, these VCs and I guess the larger capitals, to an extent, I guess, speculating that there's going to be price appreciation?
Yeah, I guess we've spoken pretty extensively over the last couple of weeks around what do you do with an asset that really appreciates in price. And the first thing that you want to try to do is, when you're holding something that's worth 100,000 Aussie, is you want to be able to earn something back on it. I think we've mentioned a number of times, in different podcasts, and I've written about it pretty extensively, that it doesn't surprise me that VCs are really looking at projects in this light as being an opportunity, particularly if you consider that price appreciation may continue, and people hold assets that are now worth a lot of money. The natural holder of those assets is going to say, what's an easy way for me to earn something back on this asset, and how do I do that securely? And so giving them multiple options, whether that's liquid staking or the derivative. I think that's really interesting. The second tokenomic approach of when do assets get unlocked, that's probably more concerning from a credit perspective in the market, and really interesting to hear your take on that, Sylvia, because that's something that sort of surprises me. It seems pretty logical and natural in this type of cycle, but surprising nonetheless.
Yeah, I think obviously everyone knows that crypto is pretty cyclical, and hot money seems to float in pretty easily. It'd be nice to see sort of, I guess, or at least hear that there's, I guess, some of the bigger capital pools are trying to be a little more patient as opposed to just being sort of hot capital trying to ride a wave and get in, get out. Are you sort of seeing anything? I know each cycle gets bigger and perhaps the capital gets a bit more patient, but are you sort of seeing any evidence that maybe some of these VCs are more here for developing the tech so that, more people can have access to these sort of products, or just are they seeing more longevity in this project, if you know what I'm trying to say?
Yeah. I think definitely there's VCs out there. There's, Bullish Capital too.
Yeah, well, tell us about it.
Which is more for the long term and sustained vision of a project, and not so much the short term speculation investment that you would see in other VCs. I think it's important to maybe as a VC look at, okay, are they gunning for the equity component or are they gunning for the token component? And then when they're negotiating the term sheet with these projects, are these projects seeing these VCs ask for like shorter vests, etc., or do they actually have a vested interest in building out that protocol and helping in terms of the advisory front,
exactly,
in terms of engagement, as well as being able to create like a strategic partnership. So it's a strategic investment is what they call it, and from there like leverage their network and go, okay, like how can I help build out this project's network effect for a longer term?
Yep. So you think you are seeing some of that a bit more so now than before?
I think there's, the VCs that have been around for a long time, that they know what they're doing and they haven't blown up for a reason, and I do see like a mixed kind of allocation between equity and token. So in terms of equity, that's for the long term, but then in the token is kind of like a short-term hedge for them where they're able to capitalize or crystallize some gains if the price action does come up. A lot of them actually hedge out their positions as well. So as a VC, if you've got a huge exposure, you're able to go like, what's a way of minimizing that volatility in that token price? You hedge it out.
Yeah, absolutely.
I'm really interested, you've been in Hong Kong now for 5 years. When you come back to Australia, what does the capital pool look like in Australia relative to other VCs from around the world, and who's doing what globally?
Yeah, I think Australia's a pretty interesting market. Last year when I came here, I was like, oh, there's not much around crypto here. And I kind of went back home to Hong Kong, relaying this to New York and the rest of our offices, like, oh, it's kind of quiet down there. But this year when I came back, I have a completely different perspective. I think it's a very different market. There was one roundtable I went to last week. One of the prime brokers there said that they were speaking to 4 superannuation funds, 2 of which are very keen to allocate into this space. One is on the fence and then the other one's like a complete no. So that to me says that interest is garnering up, as you would expect during a bull market. Everyone wants to get in, right?
Mm-hmm. Yeah, I think it's this thing we always come back to. It's like you can never really, particularly because it's such a, as you say, and it is a nascent industry, it's developing, and you can't really look at it where it is. You kind of have to look at the trajectory that's on. And so the conversations with the super funds, they just weren't happening 2-3 years ago. And the fact they're even happening now shows you the trajectory of where things are going, and the fact that there's even one super fund that's seriously looking at this is, to me, sort of shows, again, that's just that trajectory that we're heading on, which is long-term very positive for the industry overall.
Yeah, it's definitely big.
Yeah. And yourself, Sylvia, I know we've been going now for about an hour, so we'll probably have to start looking at wrapping up. But what's next for you?
What's next? A conference circuit is next. So
Back on the conference circuit?
back to Hong Kong, back to Web3 first, and then Paris Blockchain, Token 2029 Dubai, Consensus, Austin, which is going to be a big one. I think that's a huge highlight as well. Yeah.
Okay. Good. And Dubai as well. You mentioned Dubai? Yeah, we're going.
Yeah, Dubai. Yeah. You're going to be there?
I'm going to be there. I'm looking forward to your cheat sheet afterwards, so I can pretend to the guys I've been to all the talks.
Can distribute it around. Yeah.
Oh no! What am I saying? I'll definitely be at those talks. Every one of them, taking notes madly.
Exactly.
I'll compare notes at the end of it. All right. Well, how's the best way to get, I guess, in touch with you, Sylvia? If people want to reach out and talk about the various projects, maybe you're a VC or someone. How do we get in touch with you?
Yeah, LinkedIn is great, Sylvia To, and then you can just search Bullish, and I'll pop up.
Fantastic.
Yeah.
Okay. All right. Well, let's wrap it up there.
Independent Reserve, the trusted cryptocurrency exchange.